Well, coming back to the markets then, as I was saying, Wall Street has been doing exceptionally well. In fact, Wall Street has given some very impressive returns, with NASDAQ and S&P 500 giving double-digit returns. However, there's now a universal consensus that the AI bubble is building up and a lot of investors could perhaps lose their money. But that only the time will tell. But as far as the global markets are concerned, look at Kospi. That is up a staggering 40%. DAX and Nikkei both recorded gains of almost 26% each.
Absolutely. In fact, even the FTSE has returned 15% in gains, and that's where the story becomes a little disappointing for Indian investors, with Nifty barely moving the needle since the last somewhat.
If you look at 1 year, you feel you missed out. You're missing out a very, very big global market, a global rally across asset classes. But when you look at 4 years, 5 years, you realize that, well, it's a time correction. That's good. It's not a price correction, not a massive price correction. Yeah. And hopefully that we are actually consolidating before the next leg up. So in that sense, that may also be looking pretty, but maybe not at the moment, maybe a few months down the line.
Also, FIs have been keeping an arm's length from the Indian markets, chasing returns across the globe. But there's a silent financial revolution that's brewing in the country, with domestic investors resolutely investing in India's growth story.
Absolutely, Kanishka. And if you look at the SIP numbers, I mean, the SIP contributions rose to an all-time high of 29,361 crore rupees in September, helping cushion the impact of the $2.7 billion sell-off by FIIs amid the global trade concerns. In fact, the equity mutual funds also have seen contributions continuously month over month, the monthly inflows since February 2021.
Sometime this quarter, we should be able to get to some kind of a deal. Yeah. I'm quite hopeful and confident. I think recently there has been a little bit of thawing of, the relationship. We're again seeing our trade, team going back to the US. I don't think, any other trade deal has gone so much of back and forth, but hopefully the patience will pay off. I think markets, just from a sentiment perspective, I think, markets are waiting for something like that to happen. And if it were to happen, I think it'll be a big boost, sentiment booster, for the markets as well. Perhaps that could be the trigger for finally a breakout of this very tight range that we've been in for almost a year now. Yeah.
And well, as we stated earlier in the show, there is a reasonable amount of fear in the global markets, Kanishka. Absolutely. Despite the impressive returns that we have been seeing across the globe. What else explains the stellar rise of gold and silver? Now, I have to say, Kanishka, that all that is shining this year at least is gold.
Absolutely.
I mean, just look at the gold prices that have touched $4,200 an ounce, with a return of almost 60% this year. And the surge has been fueled by strong investment demand from the geopolitical tensions, the dollar weakness, the US Fed rate cut expectations, and equity and bond market risks. That are the major factors contributing to the gold's rally, according to the World Gold Council.
Absolutely, Ankita. And you know what more? Bank of America has raised its target for gold to $5,000 an ounce in 2026. In fact, Goldman Sachs, that also sees gold hitting the 5,000 mark very soon.
Well, yes, all that is glittering this somewhat is gold. In fact, it's not just gold. Silver too is shining bright, not only in the global market, but in the domestic market as well. And look at the kind of returns these precious metals have given over the last 1 year. Gold is up a whopping 55% on a year-to-date basis so far. Silver is up a whopping 70%. That's the kind of move that we have seen as far as these precious metals is concerned. In fact, if we look at the yearly move, remember, in calendar year 2025 so far, gold is up nearly 50 to 55 odd percent. This is followed by a solid 22% uptick that we had seen in calendar year 2024, and about 13% uptick that we had seen in calendar year 2023. Now, several factors are aiding the move as far as the yellow metal is concerned. Geopolitical tensions which continue to escalate, safe haven demand that continues to increase in the global market. Central banks globally are buying gold. So these are some of the the triggers which are aiding the up move as far as gold is concerned. But as I mentioned, it's not just gold. Silver too is shining bright. In fact, it has now crossed that $50 per ounce mark in the global market. And the up move in silver this year so far is followed by nearly 22% up move that we had seen in calendar year 2024. So that's the kind of returns both gold and silver have given. And for silver in particular, it is because of the supply crunch that we are seeing not only in the domestic market back home in India, but on London Metal Exchange as well. But brokerage houses, despite the up move, are continue to remain very positive. In fact, it's a divided view. Some brokerage houses are cautious as well as far as the outlook is concerned. But yes, this somewhat one asset class that is shining bright clearly is the precious metals basket.